there's the Bitcoin dominance chart. It looks to us like it's forming a head and shoulders top pattern, which would break lower. That would be very typical of this stage in a bull market. And in which case, things like global M2, Bitcoin won't track as well, but the overall space will track it really well. And you'll see the acceleration of assets. So we've had ETH as the main beneficiary, which makes total sense. A, everybody was massively underweight. And B, suddenly the entire world is building on top of ETH rails, which is what I said would happen. Is like the financial industry is, they'll choose Microsoft over Apple every time because that's what they do. You don't get fired for building on ETH. So Robinhood, could they have chosen Solana to build on? Yeah, but they chose an ETH layer too. Kind of because that's what, as you and I know, go into any single investment bank or hedge fund on earth, it's all Microsoft.
Raoul Pal dives into whether the Banana Zone Thesis nailed it, exploring markets, trends, and opportunities. Stick around to discover the truth.
Look, I've never had an issue with ETH, and yes, it underperforms over periods in time, but it was like, this is the core foundation stone of Web3 is ETH, and everything else kind of builds around it, Bitcoin being a separate beast. So what I had done is, we've talked about this before, the second cycle trade where somebody's got Lindy effect and you buy it, which was Solana at the low in 22, is usually the best trade of all because it's kind of been de-risked. And then people have the light bulb moment, which they're having again with ETH, right? But ETH has gone through that Lindy effect in the past. This was happening to NFTs. And I talked about this for a while. Nobody understood what the fuck I was talking about. And I'm like, this stuff is survived the Lindy effects. There's a group of collectors who passionately care about Xcopy, Beeple, whoever it may be, Sam Spratt, all of this stuff. And that this stuff is likely over time, as the wealth in this space, I think it goes from $3 trillion to $100 trillion over the next 8 years. That'll be the largest accumulation of wealth in history. And wealth always flows upstream, and art is the top of the pile. Even if you go to an art collecting billionaire, they might have 5 houses. After that's hard to manage. But in those houses, they have 10 times the value of the house in art itself. Right. So it has always been a proven store of value. And so what we're seeing is as ETH goes higher, the prices don't adjust down, which is what people thought happens. What actually happens is wealth creates demand for this stuff. So this stuff is ripping. And, I think the stuff that I started buying in 2024, early 2024, is up between 3 and 5x in ETH terms. And then ETH is up another, whatever X, depending where you bought the NFT. So they become this massive multiplier trade. And I'm going to show you a chart on this because I put it on X yesterday. Let's have a look.
Bitcoin could be on the verge of breaking the 122K mark in 2025, with 3 powerful forces lining up to push it higher. The first is record-breaking global money supply growth, which has reached $55.5 trillion across the 21 largest central banks. This flood of liquidity, fueled by mounting government debt and fiscal deficits, creates a favorable backdrop for scarce assets like Bitcoin. Just as investors piled into Nvidia on expectations of future growth despite flat earnings, Bitcoin could benefit from similar forward-looking bets as monetary expansion accelerates. The second catalyst is the rapid rise of spot Bitcoin ETFs. These funds already hold $150 billion in assets, and they're closing in on gold ETFs at $198 billion. Once Bitcoin ETFs surpass gold, it could shift perceptions, cementing BTC's image as a legitimate reserve asset rather than a risky speculative play. Such a milestone would likely draw in more institutional investors, from public companies to sovereign wealth funds. The final piece of the puzzle is retail inflows. Despite Bitcoin's 116% gains over the past year, mainstream participation remains muted. But with policy changes like allowing Bitcoin in 401k retirement accounts, trillions in potential capital could be unlocked. If retail interest returns in full force, these 3 drivers together could propel Bitcoin into uncharted territory in 2025.
Yeah, I do. I've said this for a long time. I mean, as you know, my main bet has been Sui for a while, and before that was Solana. Those rotations have done well. Sui still generally outperforming Solana over a longer term basis. I think the next phase of Bitcoin dominance, we're seeing the ETH rotation trade. That's good. The catch up is happening. Okay, once it gets into kind of mid-value versus Bitcoin again, then I think we'll see the rest of the space utterly ignite. And as we know, once you throw in a lot of liquidity into lower free float things, they go up more. And that's how it always plays out. And that's where we are in the cycle. Now, one of the things on the macro side that we look at is the influence of the business cycle on that particular trade. And it's the same trade you and I have grown up with in markets is earnings have to go up for people to go further out the risk curve. So when the ISM picks up properly, the business cycle picks up, corporates and people earn more. And what we find is, in the bond market, it goes out to junk, then out to emerging market junk, and then out to private credit. We see small caps outperforming big caps in equity markets. We see all of this, and it's the same with the altcoins. The issue is everybody thinks their altcoin should go up. That's the issue. Is it's like everyone's like, well, mine hasn't gone up, so therefore this is all wrong. It's like you need to have the right altcoins, and I think people mid-curve it. They get so involved in the value benefits of their particular token when really there's one simple thing is go onto CoinGecko or CoinMarketCap and look at crypto. And we've talked about this. It's like, I'm sorry, but people are going to buy XRP and Doge and Cardano, whether you like it or not, because they're cheap. In the absolute term of how much you pay for a token. So people will do that. The alt layer ones that are getting absolute network adoption, Solana, Sui, few others, great. And then somewhere in the middle, we'll see what happens. But I think the middle part is the harder play. Hey, I've got this DeFi token that could be amazing. That's pretty hard. There's some idiot-proof ones, which is big layer ones that get adoption, go up a lot, and they're less risky. And the moron trade, which is always a good one, which is just buy the cheapest thing on the top 10. Our general view, using our macro work, is the dollar probably still goes lower, that we've got another leg to go. And that's the leg that would confirm a pushing into, let's say, Q2 versus Q1 of 2026. Also, listen to what Scott Bessent, Trump, and everybody says. They basically want a weaker dollar. And so everybody in the world wants a weaker dollar because it helps the business cycle. It helps everybody. People need access to dollars. So I still think we've got another leg lower before dollar strength starts kicking in. Normally, when the economy is strong, the dollar is weaker. It's when things turn again that you tend to get the dollar strengthening. So no, I'm still biased towards weakness.
Michael Saylor, executive chairman of Strategy, believes recent tariffs on Swiss gold bars could push more institutions toward Bitcoin. Speaking on Bloomberg, he emphasized Bitcoin's unique advantage. It exists in cyberspace, free from the burdens of physical trade. No tariffs in cyberspace, he quipped, highlighting that Bitcoin has no weight, can be transferred globally in minutes, and avoids the slow, costly logistics that plague gold. Gold, Saylor pointed out, has always been heavy, slow, and expensive to move across borders. Now, with new tariffs adding another layer of cost and complexity, the case for digital alternatives grows stronger. For institutions looking to store value and transact efficiently, Bitcoin's borderless nature could become increasingly attractive. The U.S. decision to impose tariffs on gold has already rattled the bullion market, creating uncertainty for traditional investors. Saylor sees this as a clear catalyst that could trigger the next wave of institutional Bitcoin adoption. He remains confident that Bitcoin is capturing the lion's share of new capital, even as some treasury companies explore altcoins. Over the past 6 months, the number of companies holding Bitcoin in their treasuries has jumped from 60 to 160. For Saylor, the message is clear. Gold's obstacles are Bitcoin's opportunity. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news, all for free. That's all for today's video. Until next time.